Hello everyone, it's Red with RedDragonLeo.com. Sorry if the audio here is a little bit low. I don't think I can turn it up anymore. It's turned up all the way on this. Having audio trouble. I can't get any regular USB microphones to work, so I had to go to this old analog type input. Keep getting this strange clicking sound. So I'll try to speak up here as I go through this. A few days ago, we got a fake print right here, as you can see on the ES right here, and it shows just under. Let's see, it's showing 1309.50 for the high, almost 1310. We are almost there right now. So that was our signal that, you know, the market was going to rally. This here, I am looking at the 4-hour chart, and what I stated was that whenever you get down this low, right down here in the, let's go to my pointer tool, and so you'll understand where I'm pointing at. Okay. So down here at the bottom, you looked over here and you seen how low this went on the MACDs. It was down here at the -10 to -12.5 area. And what did you see? And this is on the 4-hour chart. And what did you see here? You seen the market rally from here to here. That is approximately a 1345 to 1370, a good 25-point rally. Now at this time, the daily chart was still pointing down. So you knew that this was going to be a short-lived counter trend rally because the daily chart was just rolling over and pointing down. At this phase where we're at here compared to here where the daily, I think if I looked at it, we'll go back and look at this date, but I would say the daily chart was probably doing one of these numbers, just getting ready to cross down or something like that. And what we have now is the daily chart, you know, wanting to cross back up. Over here is what we got going on here. That's why when it got down to this area, I knew that it'd be a more powerful rally back up, but it should at least match this 25 points or more. And it's way surpassed that. And we should have known that when we seen our fake print right here because they told us that. Okay, so you went from, you know, you're approximately low here, 1265 something, whatever, right here, all the way up to 1308 so far, and we're going to hit this fake print for sure. Now we had a 1269. Let's see here. Let's go. Well, can I hit the read? There it is. Okay, we had a 1269 fake print from, I don't know, a week or two back, and sure enough, we went down here and we pierced it. It's very common on momentum that they will pierce the fake print. They'll go past it a little bit, and then they'll turn and go back, you know, the other way if the charts support it. Sometimes the charts don't support that. Sometimes it's just they're going to hit the fake print, and it's not going to be a turning point. So you don't know for sure that's going to be a turning point. But based upon all the other charts, I felt that this was going to be a turning point. And sure enough, it is. So now we've got this 1310 fake print. We're about ready to hit it, complete it. So this one now is done. This 1310 is done. The only one we got left here is the 86.47 fake print on the dollar. Okay, so that's of concern, and we should be aware of that because we're nowhere near that on the dollar. So that indicates that this could possibly not be the end of this move down. So possibly when this 4-hour chart rolls over, maybe we take another leg down. I don't know for sure yet. Certainly this whole move down here was some type of wave 3. I think this move here was a wave 4 with an A, a B, and a C inside of it. And I think that this was what we call a truncated fifth wave. I thought it was going to be shorter than 3 based upon the charts and based upon the fake print giving me that clue. It would have been nice if the dollar fake print would have been hit at the same time this was hit to give me the clue that that this was the end of it, but that's not the case. So this kind of worries me that we could go down. We could go down again. So I do not expect us to roll over today You know, this is a strong up day. We'll probably close near the highs, and that might be, you know, where the fake print is. Fake prints are not always a turning point, especially when they're intraday like this. They're not big ones that are far away like this one here. This one was quite far away when we got it. I think we got it when we were back in this range in here. So we were in the 1350s to 1400s when we seen that fake print. So, you know, that was a good move down. And it took quite a while to get to it. So, you know, a couple, 2 or 3 weeks. So you kind of expected that to be a turning point. But these little intraday ones don't seem to be necessarily turning points. They're just a point that the market's going to hit. So with that being said, let's look at the other charts here. Let's look at the 2-hour chart. You're going to see a similar situation here. You can see it's up in the stratosphere here on the 2-hour chart down here. It's very, very overbought, but the daily is supporting it right now. Whereas you go back here, you can see again, and I'll use my mouse again here on this. I'm sorry, I use my pointer tool so that you can, oops, oh, I got it down here, okay. Down here. Okay, you see this right here? Oops, I didn't get it. Well, shoot. Sorry about that. Try that again. Okay, so you see down here, when we rallied from this oversold condition, we fell short because, again, this 25 point move, the daily chart was pointing down and going against it. Here, when we rallied from the same situation, we went way past here, and we're going up to extremes right here because the daily chart was kind of pointing like this, you know, possibly hooking up. It was oversold and ready to go back up. Now let's look at the daily chart so I can show you that so that you can see the difference. So we go over here to the 1-year chart, and you can see if we just zoom in just on this section right here, when this was the date it had that rally right here. Let's go back over here to my pointer. Okay, so right here when we had this strong 25-point rally, the daily chart was pointing down, as you can see, and just getting started. And so when that 4-hour and 2-hour chart recycled and pointed back up, it didn't have a long ways to go because the daily was putting a lot of pressure on it. Now over here you can see that we are already at extreme lows at -15, and the daily chart is not putting that downward pressure. It's not really putting upward pressure yet either. It's not really supporting it. It's kind of neutral. It's giving it a bullish cross right here, but it's just so far buried, it's just like it can't go down too much further right now at this stage. So you do expect it to not put any downward pressure on it, at least. Maybe not support it with upward strength, but it's not putting any downward pressure on the market, which allowed this move up from the 2-hour and 4-hour charts to be much, much stronger. So, because the pressure down is wearing out. That makes sense to you. Okay, so when we look at I don't know if we can look at the weekly, but it's not going to show up really good here on this chart because this is the ES. Let me copy that. Okay, let's just do the SPX. Let's see, shift SPX. Okay, so looking at the weekly chart here on the SPX, you can see that this is the problem that makes you worry about this rally getting any strength. The weekly chart is just now below zero on one of the MACD lines, and the other line is slightly above zero, so it is definitely still pointing down. So this is a worry upon how far the bulls can go with this. So when we look back to comparable points when we did this, if you look here, of course, at this one really is similar right in this range right here. As you can see, that looks very similar. The red line looks very similar to where we're at right now. And the black line looks very similar. It is below it. It looks, you can see it down there. So this looks similar to where we're at as it tries to hook back up. Then it has a few weeks that it hooks up and goes positive, and then it rolls right back down. And so this literally could be where we're at, right in this range right here. And we could have this move up like this. I really don't think it's going to be this kind of candle right here. That looks like a very, very strong candle, and I don't think it's going to be up like that, then back down and hit our flash crash. But you never know. You never know. So there is that possibility. If it did that, then we would expect to move up to hit this trend line falling down right here around this 1375, and also this high right here from this horizontal trend line. If it goes up that high, I don't really think it's going to do that. But you got to look at how many weeks we've been down since the top. So basically 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Well, this is the 10th week. So we have 9 weeks. Not all of them are down, but 9 weeks from the top that we've been in a downward motion. So you'd have to think that reasonably we could go up and at least chop sideways for 2 or 3 weeks, similar to what we had here. And then this was, but I think the monthly charts on this were still pointing up. And as you can see, it bounced off this long trend line right here of support, and that's probably one of the reasons it hit that, bounced up it, and then finally pierced it in our flash crash, or not our flash crash, but our big move down. Our flash crash was back down here. Okay, so I think we very well could be in a similar situation like this. I don't know how far this is going to go, but you could see exactly what the market did here at this one, at this point, and at this point the market just continued on down in the flash crash. So it had the flash crash, then it had the strong 1 week up rally, very, very strong 1 week up rally. Then it fell back down obviously, and then it continued on down. Okay, so I don't feel like we're going to have that this time around though, because we haven't had the flash crash. This seems more realistic of what we're having right here, this area right here. So that's why I'm thinking that this whole big 9 week move down is some type of wave 1. We'll have a wave 2 up for 2 to 3 weeks, 4 weeks tops, and then we'll have a nasty wave 3 down. And that very well could start, if they stage some type of false flag event. The July 28th is an 11-day. It's a yearly 11-day because you add up all the numbers in it. 0 plus 6. I'm sorry. 0 plus, let's go back here. Okay, 0 plus 7 plus 2 plus 8 plus 2 plus 0 plus 1 plus 2 equals 22, I believe. Let's see, yep, 22. And that is an 11, folks. So that's a date to worry about. And the Olympics start on the 27th. There's videos out there indicating that they are going to try to set off a bomb or something. Let's hope and pray that they fail at this. I don't want that to happen, but they're talking about it. These gangsters are murderers, rapists, satanic reptilian pigs. So that's the weekly chart. Going back here to the yearly chart really quick here before I run out of time. You can see pretty much we're down here, we're buried. We deserve a little bit of time up. So it might be choppy this week, maybe a stronger up week next week, but it might be choppy this week. Very, very possible that we roll over. So, based on where it's at, reason would think that what you'd do tomorrow is most likely is have one of these days where you, oops, didn't mean to do that. Okay, so anyway, I'm running out of time here, but basically you might have a day where you roll down intraday on a gap down and turn and go back up, put in some type of slightly higher high, then you fall down for a B wave, putting in a higher low. And then you go back up for a C wave into the following week. I've seen that happen many times. So So I'm thinking we're going to get ready to sell off here soon, folks. I'm out of time here, but I'm thinking that after a pop tomorrow, we could see a little B wave down. Okay? Thanks, guys.